The market crash of 2026. Are you prepared? This may be one of the most important financial topics right now. With war escalating, interest rates staying historically high, and a housing market on the verge of bursting, the warning signs are clear. A major crash could be coming next year. In this video, we'll break down 5 red flags that point to trouble ahead. Then, we'll look at the most important decision every investor needs to make before the year ends. Finally, we'll finish with good news: how you can actually win no matter what happens, using the strategy of Warren Buffett, the world's greatest investor. Red flag number 1. The Buffett Indicator. The Buffett Indicator measures the stock market's valuation compared to GDP. Historically, values below the average mean undervaluation, and values above it mean overvaluation. Right now, the indicator is near 200%, levels not seen since the dot-com bubble and the financial crisis. If markets continue higher in the fourth quarter, this will be a major warning sign of overvaluation. Red flag number 2. Interest rates. The Federal Reserve has kept interest rates at extremely high levels. High rates act like a handbrake on the economy, making it harder for businesses to borrow and expand. Historically, recessions tend to follow after the Fed begins cutting rates, because by then, it's usually too late. Red flag number 3. The 100-year technical chart. Looking at a century-long trend line, we can see that every time the market touched this resistance, 1929, the dot-com bubble, it was followed by a crash. Today, markets are once again kissing that trend line. Another major red flag. Red flag number 4. The housing market. Adjusted for inflation, housing affordability is worse than it was during the 2006 bubble. Prices are at unsustainable levels, and the risk of a housing correction is higher than ever. Red flag number 5. The crypto cycle. Bitcoin and the broader crypto market move in repeating 4-year cycles, 3 years of growth, followed by a sharp crash. History suggests that 2026 will be the crash year, and crypto often acts as a leading indicator for other risk assets. The most important decision: asset allocation. So what should investors do? The single biggest decision is how you allocate your assets: stocks, bonds, real estate, cash, commodities, and crypto. 100% in cash keeps you safe, but you'll miss out if markets rally. 100% in markets gives you upside, but exposes you to total risk in a crash. Warren Buffett's strategy. So, what does the world's greatest investor think? Warren Buffett is currently about 50% invested and 50% in cash equivalents like short-term government bonds. This balance gives him the best of both worlds. If markets rise, his investments gain. If a crash comes, he has massive cash reserves ready to buy at bargain prices. In conclusion, the 5 red flags: overvalued markets, high interest rates, a century-old resistance trend, an overheated housing market, and the crypto cycle, all point to a potential crash in 2026. The smartest move? Learn from Warren Buffett. Stay balanced, protect your downside, and keep cash ready for opportunities. Because in every crash, the best opportunities are born.